Good morning, traders from each and every part of the world that you're joining this series of the morning market call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM, you are number one broker in Kenya and beyond. Now, we will begin with the usual routine of looking at fundamental analysis to find out market direction. Then we shall go to the charts to see possible entries and exit as we see market expectations. But before that, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video to mean that you could revisit the HFM YouTube channel at HFM Kenya, like, subscribe, and click on the notification button so that you're not left out in future content that is quite informative and educative in this financial journey. So I'll give a 3 seconds moment of silence so that you can go click the subscription, like, and leave a comment on the HFM YouTube channel to improve on our algorithms and to make these videos reach more and more people as we walk bravely into the future. Nice. With that out of the way, we dive straight in. Very nice. We look at fundamental analysis to see what is happening. We know that the long-awaited CPI is coming out today, and CPI is a key inflation number which informs the Feds of the Federal Open Market Committee, which is the Central Bank of the United States, on its key two core mandates, which is to ensure favorable employment and control inflation. Now, the CPI core CPI on year is anticipated to come out at 3.3%, with the previous at 3.3%. So if it comes out hotter or stronger than expected, or we know that it's going to have the implication of strengthening the dollar. And if it comes out cool or lower than expected, it is going to weaken the US dollar. This is, of course, going to inform the Fed's decision to use the interest rate tool of hiking, cutting, or holding. With that out of the way, we shall be monitoring that CPI, which is going to be released today during New York session, which in Kenyan time, East African time rather, is during evening hours. So moving on swiftly, we have been noticing quite a number of happenings in the geopolitical world, with the focus and nexus being on the new bullish trend that we observe in gold. And the reason for this is because of the escalation of war, trade war rather, not military war, between China and the United States. We see that the Chinese government has decided to ban export of certain precious metals which are used to manufacture weapons, among other machineries in the United States. And this is, of course, as a response to the latest United States restriction on Chinese imports to the United States. So this trade war is having a bullish effect on gold due to the fear of escalations of this war, and it's going to be much more interesting to see where this goes walking into 2025. On Tuesday, the Chinese Commerce Ministry, which was yesterday, announced that it has banned the export of gallium, germanium, antimony, and super hard metals to the United States. The ban on the dual-use material, this with civilian and military applications, come alongside the implications of sticker end user and end use reviews on graphite exports to the United States. So basically, the minerals which are in the recent past been heavily mined from Chinese government. We see the Chinese government putting restrictions that is not going to export to the United States. This, of course, will have an implication on the economy of the United States because they heavily rely on these metals to manufacture both military and civilian applications. This could be traced back to Donald Trump's threat to impose a 25% tax or tariffs on imports from China. We remember Donald Trump is alleged to impose tariffs on imports from China, Mexico, and Canada. Now, Chinese is responding to this by restricting the export of these minerals. But let's take a look to see what is the core significance of these minerals so that we understand the implications of this working into 2024. The critical minerals that China has banned, which are the three that we have read, are significance in advancing the United States military technology and also building civilians applications. Now, having understood this, we know that fear being injected into the market will tend to make gold be bullish as central banks, investors, and traders go into a much more safer haven, to allow to feel safe or to shelter as they wait for this war to cool down. So the implication of this to the charts, beginning with gold, we see that gold broke the key level here at 2681.90, and we see there's a sort of retest and a bounce to the top. We want to see more highs to be broken to give us much more confidence that it's going to continue going to the upside at 2701. But as it stands, we know that we are getting in for buys for gold. You see yesterday closed with a Marabuzu candle, which indicates bullish pressure. A bullish Marabuzu candle closed above. Now I want to see price print to the upside, but if you go to a lower time frame to see clearly, we want to see the highs being taken out to confirm this bias. Now, once this bias is confirmed with proper risk management, we can keep getting in for buys and possibly keep on adding more positions as the buys keep moving to the upside. With that out of the way, let's look at other asset classes here on Great British Pound against the Japanese yen. We see that we are still in the bullish run that we called out yesterday. The Great British Pound is recovering against the Japanese yen. At the time of this recording, we are having a little bit of retracement with 0.30%, but we want to see more highs to be taken out to confirm this new trend that is forming from a bearish trend to a bullish trend. An awesome change of character that is reacting from a key level. Want to see a test of this resistance here and a break above for continuation of this trend as we monitor more economic data coming in. Going to US dollar based currencies. For US dollar against the Canadian dollar, we see that we are clearly in a bullish trend on the daily time frame. We mentioned this yesterday, but we see we are a little bit in a consolidation where the market is neither moving aggressively high or aggressively low. We want to see the highs to be taken out to confirm the continuation of this bullish trend. I remember earlier in the week we said we want to see a break above the 1.41781. It happened, but there is no candle closure above this area, this recent high that was caused by Donald Trump's sentiments on imposing tax on Canada, China, and Mexico. In this case, Canada, because we're looking at the United States dollar against the Canadian dollar. We want to see a candle closure above to confirm the bias to the upside. However, if we go to even much more lower time frame, like the 1 hour, we want to see a little bit much of retracement for price to move to the upside. But today, during New York, having to anticipate the CPI that is yet to come out, we might face a little bit of consolidation where the market makes equal highs and equal lows. We'll be monitoring much towards that. When the data comes out, we have much more clear bias on either direction. For USD JPY, we see also we were having some sort of recovering where the US dollar was recovering against the Japanese yen, but of late we are seeing a break of this low from the daily time frame, suggesting that we might be trading now to a bearish momentum. If you go to a lower time frame to see it clearly, from the 4 hour, it suggests that we are moving bullish after the break of this significant high right here and the takeout of this second significant high right here, which we highlighted with a candle closure above, suggesting that we might see price printing much more to the upside, putting into perspective that the US dollar is doing good, but not good enough. We shall be able to diagnose the health better after tomorrow's CPIs. For USD CHF, Swiss franc, we see that we are in a bullish. We retested the key level here. Price kept on making lower lows. Let's go to a lower time frame to see the expectation. We want to see more highs to be taken out so that's to confirm the fundamental bias of the US dollar or the US economy doing good in reflection to the US dollar, and possibly come and test this key level here and break above as we anticipate more data coming in, so buys for that. For AUD USD, now we switch to US dollar quote currencies. We see a test of the key level at 0.3588. Go to a lower time frame to see the expectation of that. We know that the US economy is fairly doing good, so we want to see a break below and price to keep moving on the downside. Now we are on the pairs with the USD coming in second, or US dollar quote currencies, to confirm the fundamental bias as we anticipate CPI data coming out today. For GBP USD, from the daily time frame, we see a fake out below this key level at 1.26116, a retest again at the same key level, and price going to the upside. Go to a lower time frame to see what is happening. We see much more of consolidation where price is neither breaking highs or lows. This could be said to be awaiting the release of CPI for it to give us much more clear bias or direction. For Euro USD, which move slightly similar to Great British Pound against the US dollar, we also see much of consolidation from the higher time frame, from the daily time frame. If we go to the 4 hours time frame, We want to see break of laws to confirm the bias of in the bearish trend for US dollar quote currencies due to the improving US economy. Not good, but good enough. After today's CPI, we will anticipate much more clear data, which is going to give us the clear position or health of the United States. If we go to the 1 hour, we see a bearish trend. We want to see the lows being taken out as we anticipate the data. Now, the key takeaway today is to monitor the trade war between China and US. This majorly affecting precious metals with our focus on gold. It's not something new, it is something that has happened in the past quite a number of times if we look into recent histories, but now we are revisiting. Will history repeat itself? I guess we shall wait and see. But if this is the case, we get in for more market direction to the upside and for gold, which is likely to be the case as we anticipate the inauguration of Donald Trump in mid-January next year. So that's pretty much it for today. Kindly visit the HFM YouTube channel at HFM Kenya to revisit. I see some people are saying they missed the first few minutes of this series. You could find it and replay it on the HFM YouTube channel at HFM Kenya. And see, by any chance, this is not financial advice. This is meant for purely information purposes. Kindly do your due diligence. And for call to action, visit the hfm.com if you want to know much more about financial markets. Register for account and you'll have our experts call you to see the possibility of continuation of that conversation. See you tomorrow, the same place, the same time, to do things the same way. That has proven consistency. Until then, God bless.